Hello viewers, stop guessing, learn in minutes whether to accept or reject a project. Calculate IRR, NPV and payback in Excel quickly and without mistakes. In this video, Learn Accounting Pro Studio will walk you step by step and we will build a calculations sheet in which we will calculate IRR, compute NPV and prove it manually, then find the payback period. You can download the free Excel template of these calculations from the link in the video description. So let's start. I will now switch to a clean sheet with only project years and cash flows which I have pre-written, so we build everything step by step. Now we will start with the internal rate of return, the IRR. For that we will select this blank cell and type the IRR formula for the cash flow range. The formula is equals to IRR, open parenthesis, select this whole cash flow range, close parenthesis and hit enter. And there we have our internal rate of return percentage. IRR stands for internal rate of return. It is the annual rate that makes the net present value of these cash flows equal to 0. In plain words, IRR tells us the project's average yearly return. We include the year 0 negative number and all the later inflows in the same range. Hit enter and that's your project return based on these numbers. Now for NPV, make sure to type the discount rate. For example, I'm using 6% per annum discount rate here, right? And in this NPV cell, type formula equals to NPV, open parenthesis, select this discount rate, comma, and select cash inflows from year 1 till year 5 or whatever range of inflows you have in your example, close parenthesis, plus year 0 outflow. Hit enter and there we have our net present value, the NPV. NPV is net present value. It tells you in dollars whether the project creates value today after discounting future cash flows. Excel's NPV function discounts years 1 to n, so we add year 0 cash flow separately. With our 6% rate, this formula gives the present value result for the whole project, which is 44,410. Right? Now for NPV proof, we will do manual calculation and create a discount factor column and present value column like this. Now we will type the discount factor formula. For year 0 it will be 1. For year 1, type formula equals to open parenthesis 1.06, it's our discount rate, close parenthesis, raised to the power minus this A3 cell which says year 1. Hit enter and this is our discount factor for year 1. Now drag this formula down and there we have discount factor calculated for our whole project. This simple formula raises 1 plus rate, which is 6% per annum, to the negative year. For year 1 and 6%, this becomes 1.06 raised to the power minus 1. That's how we bring future money to today's value. Now present value formula is equals to cash flow multiplied by discount factor. And now copy and paste this formula over here and you can see we have calculated our net present value manually, which is the same as our net present value that we have calculated through Excel function. This proves that the Excel NPV formula was used correctly. Now for payback period, we use the extra cumulative column. It shows how much of the initial investment is recovered each year. To create the cumulative column, we will use these steps. For year 0, it will be equals to this cash outflow. For year 1, type formula equals to C2 cell plus this B3 cell, and now copy this formula till here. Each row adds that year's cash to the running total, so you can see when the total reaches 0 or positive. Now use the payback period formula. We will use lookup function equal to lookup open parenthesis 0 comma this cumulative range comma open parenthesis this project years range minus open parenthesis again this cumulative range C2 till C7 divided by only the inflow range of B3 till B7. Now close parenthesis, hit enter, and there we have our payback period in years. The lookup asks Excel to find where the running total crosses 0. This middle argument prepares per row adjusted values that include the fractional year calculations. It essentially calculates an adjusted year value for each row. Year minus cumulative divided by that year's cash. When lookup finds the 0 crossing, it returns the matching adjusted year that gives us the payback period including the fractional year. For our example, the payback number tells you how many years until the 80,000 initial outlay is fully recovered by the yearly inflows of 22,000, 26,000 and so on. The payback here is 3.1. That means about 3 years and 1 month to recover the cost, as you can see from here as well. So you have just learned how to calculate IRR, validate NPV step by step, and compute payback period in Excel using clear, reliable formulas. If you found this video helpful, then hit like and subscribe to Learn Accounting Pro Studio. Thanks for watching. Keep learning, keep growing, and I will see you in the next one.